Hello, I'm early, just making sure everything works right. So wait for a few minutes for everybody else to join us. Okay, ready or not, here I come. Okay, so the topic said, no, don't leave any money on the tax table. So you want to know what it is, huh? Okay, here we go. So most people, when they start businesses, they are so keen on getting all the sales funnels and the website and all the bells and whistles. But they don't remember that the accounting component of your business can make or break your business. So, not because I'm an accountant, but even Warren Buffett says that you have to understand accounting in order to succeed in business. So, I just wanted to take today, maybe I'll do like 15 to 20 minutes. I'll try not to keep it too long to make you bored. But the number one secret to this is that hire the proper consultants. So you can either see an attorney to get the proper tax structure, tax entity in place. So whether you want, if you're in the United States, whether you want to be a C corporation, which files its own taxes and it doesn't go on your personal tax return, or you can do an LLC, which is a limited liability company. What that does is that it protects all your personal assets. In case somebody were to sue you, all they will get is what's in your bank account in the business account, unless they can prove that you've had a gross misconduct. Then that case, they can pierce through the corporate veil and get to your personal asset if you really did something wrong, like defraud people and stuff like that. But other than that, you'll be protected with the LLC. The other structure, like partnership, also with that too, there's no personal protection, legal protection with a partnership unless it's an LLC partnership. So there are different kinds. So all this I cannot go through in a short video, but it's worth the money to pay an attorney or a tax accountant to explain to you what all that entails. And then you choose the right entity for the type of business that you want to do. So that's the number one, hire the right consultants. The number two is that keep proper accounting records. So I get people all the time, they say, well, I'm just starting up and I don't need an accountant, or I don't need an accounting system because all I have is expenses. So I don't have to file taxes. And then I smile and I go, well, you're leaving money on the table right there. Even the money that you use to incorporate a business in Illinois is like $150. That $150, it depends on the type of entity you have. You can deduct that against any other source of revenue income that you have on your personal tax return. For example, if you say even you are doing it as a sole proprietor that has no corporation or anything, that 150 can be deducted on the 1040 on a Schedule C as a loss. Even if you have no revenue at all, you can do that. So right there, you leave money on the table by not having the proper advice from the proper person. Now, most people will talk to a family member and then they will take advice from them, unless that's what they do for a living. I don't want any advice from anybody who don't know what the heck they're talking about. So sometimes you may think you're trying to be cheap and you take advice from here and there. You can YouTube it, or you can some YouTube, though you have to make sure the person is reputable. Like I have my own YouTube channel. If you put my name there, all this is going to also go on my YouTube channel. If the person is reputable and they know what the heck they're talking about, then you can use that advice. And even with that, I will still say check with a local accountant, especially when it comes to sales tax and your local taxes, you still need a local accountant. Those of you in Australia, Mexico, I have people from Canada watching this. Please consult a local accountant to make sure that everything you're doing is correct. I don't want you to take what I'm saying and then applying it and say, well, you told me to do this, but everything I'm talking about is in the United States on the federal level, and on the local level, I will say, please consult with your state, somebody in your local state for the local taxes and stuff. So it never hurts to pay someone to give you the proper advice. The other thing is that anything you pay to anybody to give you advice, as long as they're paying taxes on the money you pay them, you can give them a 1099 if they are not like a corporation or an LLC or registered company. Even if they're a sole proprietor, make sure you get it in everything, an invoice or the check that you're paying them. If you're in the US, if it's over 600, you have to give them a 1099. And all this, somebody can tell you and advise you. So if you pay anybody, you can write it off, even if you have no income at all. But mind you, don't try to run a hobby as a business and try to do that on taxes. Make sure that at least the first year, if you don't have any money, that's fine. The second year, there's no rule. But if it hits, say, 3-4 years and there's still no money, then the IRS will be looking at you as a hobby. So make sure that whatever you do, you make sure that it's a profit-oriented business, not just a hobby that you're just trying to create losses and get tax deduction. That's not the way it should work, all right? So please make sure that you follow the law to the T. I'm all about following the law, all right?